Hi, this is Stewart Scothorn from the Annuity Link. I want to talk to you today about something that all of us want to figure out. How is it that rich people are able to always have their money work for them? Is there any product out there that we know about that we could actually look at and say, this would be an example? Well, let me tell you today about what's known as a financed premium product. And that is a life insurance product that basically you're utilizing financing, but in that you leverage it just like you would leverage buying a home. While you could pay cash for a home, most people usually have a mortgage because they're leveraging their assets to accumulate an asset that's bigger. This works very similar. However, the interesting thing as you walk through it, there are three things that this particular policy does as well that is not something that's available to the average person. And I say average, really, it used to be that someone with $10 million in liquid assets would be able to collateralize and buy a life insurance policy to do what we're talking about doing today. They've actually reduced that to where really you can get in a position that middle income, higher income earning individuals can have this opportunity. And this is really what's known as the financed premium. Let me kind of just walk you through from a view of 30,000 feet what that would look like for someone. So it does three things. It's going to be able to go ahead automatically and have a substantial death benefit because that's what you're buying this for. It's a life insurance product. Because it's a life insurance product, there are a number of things that happen. You have, when you get any money, it's always tax free. That's a big thing. So it's going to be tax-free money, no matter how you get it, again, death benefit, or as this particular example is going to show you, you're going to be able to, the second thing, create income. You can create lifetime income that is going to happen from utilizing this particular product. And then the final thing is you will be able to have some living benefits while you are there because you're accumulating cash value in this account. That's the wonderful thing about utilizing life insurance. And in this case, you're utilizing leverage. And the scenario I'm going to give you is a 39-year-old male in excellent health who is willing to go ahead for 5 years to put in $30,000 a year for 5 years. Now, because it's leveraged, it means there's going to be a bank involved. They're going to put 5 times that amount in terms of a loan that you'll be able to get. So you are financing additional premiums, and automatically what's going to happen is you're going to see the benefits start. So day one, if he looks at putting in $30,000 a year at age 39, he's going to receive income at the age of 65 of $139,788. Call it $140,000 for the rest of his life. If we use that as where he wanted that income, and that stream of income continues for the rest of his life, using 88 years of age as when the average person right now is passing away, that means that he's going to have estimated total income of $2,935,000. So all of that, and looking at how this works for the average person, and again, who is that 39-year-old that has $30,000? For us, it's generally a professional that has a salary that's above $200,000. He's maxed out his 401k. This is an alternative that we don't look at and say, don't do 401k. We're saying it, do it right beside it because you will enhance your future returns. A 39-year-old right now is going to worry when he's 65 about What happens if there is no Social Security? What happens about my income so I can continue living the lifestyle that I want? This doesn't answer every question, but it certainly checks that box to say, I have a product that really just for 5 years, I'm going to put $30,000 away, and then it's taking care of the rest of my life. And that's the beauty of utilizing this financed premium principle in how you do it. Now, keep in mind if something happens and he passes away, then there's automatically a death benefit. If it's in the first year, there's $1,800,000 death benefit. When he does pass away at 88, not only did he get all of the income that he has, he'll also have a death benefit at 88 that goes to obviously his estate that's going to be tax free as well. Part of what we see happening in the market is there's no way to predict what's going to happen in the stock market and how your returns go. Again, because this is a life insurance product, there are guarantees in place, meaning you're right, it is going to follow what happens to some of the indexes, say the S&P 500, but the one thing about insurance products, and this one in particular, is you're guaranteed not to ever be below zero. Well, what does that mean? If the stock market goes down, that doesn't matter. You're going to be zero. And as it's, the famous quote is zero is the hero. So this particular situation, you'd never lose any money. Now, that part of the equation with an insurance product only creates security. It creates the ability for someone to know at the age of 39, when they turn 65, not only do they have a death benefit that's been guaranteed and in place, they have future income that's set aside for them. And probably the biggest thing about all insurance products, I can't say all, but most insurance products, is that they're all tax free when they come back. The way that this program is set up, it's actually letting people have an opportunity to utilize what the ultra wealthy have utilized for years. And we're excited at the Annuity Link to be able to share this with you and run scenarios like this. Again, somebody's investing $150,000 over 5 years with almost 2.8 million tax free. If you want to look at internal rates of returns and look at that, I don't care how you calculate it, there's not a product out in the market that can probably match that. Again, I also will say it's not to take place of a 401k. We're looking for that person that wants to enhance or put money into something that's safe, that you have a guaranteed portion of your money that's set aside. And really, this is planning in the future. That is something, number one, you're going to need life insurance if you're doing well anyway. Number two, you can create lifetime income. And third, the best thing is all that is tax free. Let me encourage you, if you have any questions, please contact us. Like this video and follow us for more content.